Stock market crash or rocket ship rally? At this point, like honestly, I don't even know. Because right now we have potential inflation effects, COVID wave 2.0, the national debt crisis, negative interest rates, and everything's pointing down, yet the stocks keep going up. And I don't get it. So what I want to do today, look at some headlines from stocks, headlines from crypto, and I just want to see where the momentum's at. I want to see where I can make my money. So sit back, relax. Good morning, good afternoon, good day, wherever you are. My name is Zach, and as always, I'm your host here on The Divine Dividend. So today we're just looking at headlines, all right? I'm trying to see where people's heads are at. I want to see people who, if you just go on Google and type in stock market news, click the news tab, that's kind of where people get their information from. So I just don't expect everyone to go really deep diving into data sheets, balance sheets, just kind of trying to read between the lines. I think a lot of people look at headlines, and I'm not saying that's what I do, but what I'm trying to do is just, if you go ahead and categorize people into like the masses, and this is what they're looking at, this is what they're going to be feeling, okay? So all of these little tabs up here that I'm clicking on all came from the first and second pages of Google. So anyone who's doing their research and just like picking like some of the first articles that they see, this is how they're going to be feeling, okay? Okay, so starting off, Seeking Alpha. Take it or leave it. Sometimes their articles are good, sometimes they're BS. Their summary, not only are we in a crazy rally, but there are indications that the recession will last longer than some people think. In the introduction, he's like, I think I am not the only person who can no longer fully understand the current stock market developments. Not only are we in a crazy rally, but there are indications that a recession will last longer than some people think. Okay? So throughout the article, he goes and divides investors into two groups, one being smart money and one being dumb money. So the smart money he calls basically banks and larger hedge funds. All right, and dumb money basically being retail investors, the majority of everyone else who's not like dealing with bank money. So the smart money, he says basically they're putting their money into money market funds. But down here he goes, these include cash securities and bonds with the term of less than 12 months. So why is this important? They're trying to stay liquid, and their terms are less than 12 months because during that time they're going to want to have cash on hand, and they think that there's going to be a good buying opportunity. Well, what would bring about a good buying opportunity? A stock market crash. Okay, so our next article is posted by Forbes, and this came out January 15th, 2020. So this was pre-COVID. We didn't even know COVID was a thing really at this time. So unless they had the ultimate inside scoop, then there's no way that they could know that the COVID recession would be happening. So they're obviously talking about the one that happens, the normal one that happens every 8 to 12 years, the one that we're overdue for because the last one happened in 2008 during that financial crisis. All right, next, Market Watch. Billionaire Mark Cuban, shout out Shark Tank. That's like my favorite shark. Explains how stock market bears feel about the bulls. I don't think they are really factoring in what they're going to see on the other side of coronavirus. So whether it's over now or whether there's 2.0, we don't know how far the other side of COVID is. But a couple questions that he brings up that are pretty interesting is, what will the economy look like? How will businesses restart? How many workers will be rehired? What impact will the worst pandemic in 100 years have on the American psyche? All right, time. Welcome to the first global economic depression of our lifetimes. The Motley Fool. 3 unstoppable stocks to buy before the next market crash. This was literally posted today. All right, next, Barron's. If the big 5 tech stocks falter, they'll take the rest of the stock market down with them. So maybe you have, maybe you haven't been paying attention recently, but Facebook, Apple, Amazon, Microsoft, and Google are taking over. For some reason, they took out the N. It's no longer the FANG. It's the FAMG? Question mark? But these 5 are just on a tear, and they're creating this divergence from the NASDAQ, from the Dow. And it's just growing at like an uncontrollable rate. And so what I think is happening is a lot of the smaller companies, if the COVID just continues to have its influence, the littler, smaller companies are going to go out of business. They're not going to be able to survive. And what's going to happen is these already large companies with over $1 trillion, $1.5 trillion market caps are just getting bigger and bigger, and is creating some sort of bubble. So I'm going to show you right now in a couple of these graphs what I'm talking about. Facebook up almost 20% in the last 3 months. Apple up over 30% the last 3 months. Amazon at up just over 23% the last 3 months. Then you got Microsoft at up just over 14% the last 3 months. And lastly, Google at up almost 18% over the last 3 months. Okay, so I'm just gonna go pick a random day, which is pretty close to the lowest lows. So we'll go with March 20th, okay? If you would have bought one share of Facebook, Apple, Amazon, Microsoft, and Google on March 20th, so one stock of each, you would have spent a total of $3,419. Your net equity now would be $5,314, giving your profits in at just over 35.6%. That's in 4 months and 5 days. You would have made 35.6%. That is insane. And the fact that it's Facebook, Apple, Amazon, Microsoft, Google, they're all techie, they're all in the same sector. This is starting to look kind of bubbly. Like, they aren't supposed to grow this fast. And even if they were undervalued, they weren't that undervalued to where we would be seeing this much growth, okay? So while this is on one side of tech, I want to take a look at the other side of tech, which would be crypto. So let's take a look at those headlines and see where we're at. Okay, so this first one from Forbes. This was posted last month. Top investors are unfazed. Bitcoin is on track for explosive rally to 50K. So I'm not going to read through this whole thing. I'm just going to scroll down. But one of the highlights is, as discussed in May 2019, if Bitcoin is half as volatile in this cycle as it was in the last, we would still expect it to cross 50,000 per Bitcoin and have a market cap of $1 trillion. Okay? So what is this saying? If it's half as volatile? Well, Bitcoin moves in cycles, right? And it's usually triggered by the halvening. So the first one was like in 2012, second one was in 2016, and the third one just happened earlier this year. But if we look at the most recent bull run, which kind of started mid-2016, we'll call it June 28, 2016, the price was $667 for one Bitcoin, okay? Moving all the way up to January of 2018, where we got just shy of $20,000 per Bitcoin. So what the article is saying is basically, even if Bitcoin is half as volatile, or we see half the returns, percent-wise, that's all it takes to go from right now to a $50,000 Bitcoin. All right, next, Bitcoin.com, ferocious rally. Weiss ratings bullish on Bitcoin. Price to hit 70K next year. Cointelegraph. With $10,000 near, is Bitcoin price ready for a big breakout next week? The price of Bitcoin is showing strength as it broke through a key level of resistance this week, $9,400, and putting $10,000 within reach once again. Okay. Also Cointelegraph, which obviously they're going to be a little biased. I mean, it has coin in its name, right? But anyways, like I said, this is on the first page of crypto news or Bitcoin news. This is what people are reading. Bitcoin halving will make or break for stock to flow model plan B. In the run-up to the halving, the well-known prediction theory is facing its biggest ever test, with the end of year price target at now $30,000. So the stock to flow model, let's take a look at that real quick. Okay, so the stock to flow model, basically, it measures the issuance of new Bitcoins each block against Bitcoin's existing supply, a method which has proven highly accurate in charting price performance. So the stock to flow model works for any sort of commodity or resource that continues to get mined, okay? So where not all of that resource is actually out. So for gold and silver, for example, we've been mining it for years, so you're not getting as much now per day as you used to, like 50 or 100 years ago, because so many mines and ores they've kind of been tapped out already. The same goes for Bitcoin. Every 10 minutes, 6.25 Bitcoin are created. And then every 4 years, that 6.25 will just get cut in half. 4 years later, it'll get cut in half. And so the new supply of Bitcoin entering the system just gets lower and lower every 4 years. But if we look at the stock to flow model for Bitcoin, which has been going since 2010, it's been relatively accurate ever since. So this actually colorful chart right here, this is the price of Bitcoin. The colors are just represented by how many days until the next halving, okay? So if you look since 2010, it's pretty much followed the line. I mean, obviously a little bit above, a little bit below. But if you were to take an average on this log scale, logarithmic line right here, it's following the chart pretty well. And let me get this out the way. if you look to see where we're at right now, about 2020, and then following into this next bull run, okay, we're sitting at about $100,000. That's what the stock to flow model is predicting. So 2020, 4 years later, will be the next halving. So that'll start the next cycle. And then you'll probably see some up and downs. But at the end of that bull run, according to the stock to flow, you're looking at a $1 million per Bitcoin. Okay? So take it as you will. This is a model that's been around for a couple years, and it's proven accurate basically since the inception of Bitcoin. All right, guys, that's pretty much all I got for today. I don't really want to tell you one way or another. Put your stocks crypto, put your money in stocks, gold, silver, whatever the case. But I just want you to take a step back and see where the momentum is at right now. Okay, Bitcoin has been fighting ever since December 2017, early 2018, this downward trend, this line of resistance, and right now it's about to break through, okay? Versus the SPY, right, so the S&P 500, we have this sharp line of support right here, but as you can see, we're about to drop below. So in this one, if we break the resistance, you can expect it to go up even further. If we break the line of support, expect us to drop down further, okay? And these are both macro perspectives. So just take it for what it is. Yeah. So thanks for watching. I hope you invested your time and your money wisely today, and I'll see you next time.
You got to make your decisions, but don't wait too long.